Okay, now what we're looking at is forex trading, but it can also be used to trade stocks as well. And this is what we call divergence trading. Now, divergence trading is, trust me, is one of the best methods of um you know in terms of trading reversal. Now, let me explain to you what I mean by reversal. Now, there's so many times in the past when I basically I like I let me give you an example, like BT, British Telecom, a big major player in the stock market, and BT drops, and then BP drops again, and you're like, nah, it can't go any further, and then it drop again. Nah, nah, this thing can't go any further. And then it drops again. I'm like, Jesus. And you just see your money just going away and leaving you. And you hit the stop loss, and then you're out with a big loss. Now, this is, for me, I think this is one of the best trading strategy to trade divergence in terms of reversal trading. And especially if you're trading it against a trend, because if you're going against a trend, I think, that's a wrong thing to do. But if you do want to go against a trend, so you can get, because remember, we can buy a stock and the stock rises and we make money. That same stock, we can sell it and make money. So we can make money on the ebbs and flow, the up and down of the market. You see, so this divergence trading strategy for me, and it's, remember, all the resources for this is for free. You can get it online. Yeah, you can get all of it for free online. So what's happening there, guys, is this. I am now saying, okay, I need to stop making mistakes like that. I need to stop losing money like that. Because if something is going down, why should I want to buy it if it's going down? But then there's a tendency for people to think, well, when will this thing turn around? When will it change its direction? Because remember, these things will never go down forever, and these things will never go up forever. They're going to be a pullback point, goes back up, the ebbs and flow. Now, I have looked at so many different trading strategies, and I've looked at, I only cleaned my office about 2 months ago, and I've looked at piles and piles and piles of paper that I've written stuff down. And let me tell you something, my brain now is so saturated with information. I've got so much information in my head, I'm telling you. And now, in terms of not letting it burst, I can share this information with you. Okay. Now, just make sure you have a look at the risk disclaimer, okay? And the risk disclaimer about, there's nothing guaranteed in trading, and just information there about me as well. Okay. Now, the first thing we're looking at now is what's divergence trading, okay? Now, what's divergence trading? Divergences are used by traders in an attempt to determine if a trend is going, if a trend is going to get weaker, which may lead to a trend reversal or a trend continuation. So the market is going up and up and up, but then there's some indicators that I'm using down here that's going to tell me that the momentum, and when I say momentum, it's like, for example, you've got a very, very big, strong, healthy person, and you've got that really skinny person, and they're running towards each other, right? And then the bigger person then hits the smaller person. It's going to bounce them out the way. That's what we talk about momentum. So in that case, the bigger person is going to hit that smaller, tinier person out the way. But there are times when they've got this thing we call, we look up, we little but we talawa, is when you got that little person now, not that big person out the way. And that's what we're trying to find out. When is this momentum will change its direction? So therefore, it doesn't just carry on and carry on forever. So divergences are used by traders in an attempt to determine if a trend is getting weaker or may lead to a trend reversal or continuation. When they say continuation, it means to go down. It's going down, but it comes back up and then move back down again. So one should use a few momentum indicators to help. And I'll share with you the momentum indicators that you can use. And how many times have I said, okay, yeah, this is the typical thing. How many times have I said, right, that this market can't go any further, lower or higher, and it just does it, end up losing money. But since I've actually started using divergence, my profit margin in trading significantly improved. This is a strategy that is used by many traders across the globe and can be traded on any time frame or any market. I'd recommend that you never take reversal trades unless it is a divergence trade. That's my recommendation. And also, I would say as well that you know, where reversal is concerned, if it's the market is in an uptrend or a downtrend and you're going against a trend, I would say you've got a trading plan yet that you're following, and you say, okay, I'm looking for 50 pips. I get my 50 pips, I get out the market and walk away. Okay. Yeah. Okay. So, right. Aren't you able to see my screen? I'm not sure. Are you presenting? We can only one screen. Yeah, yeah, you only see one screen. I'm not sure. I'm not sure. Let me just pause for a minute just to check what's happening. Right, guys. So where am I now? I'm at. I would recommend that you never take a trade unless it's divergence, right? This is one of the best trading strategies. I should have however, you should have a fixed criteria and a fixed trading strategy that you're going to use. For example, you've got a fixed stop loss and a fixed take profit and so on. You need to make sure you put all of these things in place before placing a trade on divergence. Okay. Now, so what are the best divergence setup? No, one should never put their trading account in jeopardy by taking fake signal or signal that does not adhere to the list below. What should you be looking for? Okay, this is what you need to be looking for. You need to be looking for what we call a higher high. Okay, let me explain to you what is meant by a higher high. Okay, now let me see. So if we have, right, a market, and let me tell you something here. So the market is like this. This is the high. If the market comes up, then the market pulls back, the market then goes up. Now this bit is a high, okay, and this is now a higher high. That's what is meant by a higher high than the previous high. So these are just candlesticks moving up, and this is now higher than that one. That's when we're going to look to take divergence. Or we've got a lower low than the previous low. So let's look now. So we've got the market going down, pull back up. Now here now we've got, this is then the market basically go like that. So this is a low, but this now becomes a lower low. Yeah, but this now becomes a lower low than this one. All right, that's what we're talking about when we say lower low than the previous low. So that was a low. These are candles, but I'll show you on a real chart in a bit. And then what we call double top. So if the market goes up, to a point, pull back, goes back up to a point, this is what we call now. Yeah, this is what we call double top. Okay, so that top and that top. Okay, these are the highest probability trade setup we're talking about here. Then we also have got what we call a double bottom. Double bottom now where the market goes like this. Okay, goes down, pulls back, goes down, pull back. This is what we call now like a double bottom, okay, or a double top. All right, and this is what we call a higher high, meaning it's higher than that high, and this is a lower low, which is lower than that low. Simple as. And that's all we're looking for. And you can literally draw these, have them like, you know, for example, I've got in front of me, I've got my rules of the holy trading strategy. It's here on my table. I follow it. If I ever not follow this, I am going to lose people's money. and you've got people with 25,000 pounds that I'm trading for them. I can't afford to lose those sort of money, you know. So I've got to stick to my rule. I've got to take this thing seriously, and I can't afford to have any messing about at all. Especially now when, you know, I want to be that next hedge fund manager, that black hedge fund manager that is representing, because, you know, just as though you see Lewis Hamilton out there and he's one of the best Formula One driver in the world, that's me. I would love to be that type of hedge fund manager. I know I'm already established as an outstanding teacher, but now I'm in the trading world and I want to be that established person. Now, anyway, when not to take divergence trade, okay? Now, when you've got big news event, now remember, this market is already either trending up because it's a higher high, or this market is trending down, which is a lower low, okay? Now, if you've got events like non-farm payroll, okay, interest rate decision. Now, the non-farm payroll is the first of every month. The first of every month, what we have is this, okay? The first of every month, you've got the jobless claims in America. Now, that has a significant impact on the markets, right? And the market can swing really volatile, lots of activity in the market when that news event comes out. Another big major event is interest rates, okay, and gross domestic product. Now, when we say interest rate, for example, let me give you an example of interest rate. Now, the Bank of England announced only, I think it was last week, when they're thinking about negative interest rates. Like countries like Switzerland, they have negative interest rates because you put your money into a bank in Switzerland, you've got to pay the bank to keep your money because they've got negative interest rate. Okay, so interest rates will have a big and significant impact on the stock market, on the forex market, and so on. All the markets will be affected with interest rate and non-farm payroll. But the non-farm payroll tend to be significant towards the American economy rather than, but you know, if America sneezes, then everybody else get flu. So it's that sort of setting. Now, another thing is GDP, gross domestic product. Now, how much a country is producing and how much the country is gaining as a means of income. So that's another thing that will have a big impact. And those are the three significant events. Now, for you to find information about these events, you can always use the dailyfxinvesting.com, Forex Factory, Market Pulse, you know, all of these different places you can find information about the major events using the calendars and so on. Okay. Now, the next bit now is this. What are the best indicators for divergence? Now, the one that I use the AWISUM indicator, also MACD, but I don't really use the RSI and the CCI. No, these are all what we call momentum indicators. Okay, these are all what we call momentum indicators. And what do? They measure the momentum of the market as these candlesticks move up and down. That's what that's what these indicators will do. Now, these indicators also are what we call lagging indicators, meaning that it's not going to give you what's going to happen in the future, because if you knew what's going to happen in the future, then everybody would be a millionaire. And remember, where trading is concerned, it's a zero-sum game. Someone has to lose for someone to win. Now, when I go and I trade with a trading company, yeah, they don't put me because and let me tell you something. A lot of traders don't know this. When you go and you trade with a company, yeah, they want you to lose, and you might and you might not understand this, but let me explain a little bit. Now, you see, I remember once I was a company, right, and I moved a £5,000 account up to £19,000, right? And the guy was like, "What are you doing?" No, but there was a leaderboard setting, and I was on top of the leaderboard. No, this is my account manager who was supposed to be helping me, right? And he said, "What am I doing?" He needs to see what I was doing. So then I then show him a strategy, and he said, "Ah, that's what you're doing." And then what they eventually do, they refuse to give my money, and they block me and everything. So I didn't get my, that's the reason why they weren't a regulated company. So please, I'm asking you, if you're ever going into trading, you must check out the company to see that they are either SISEC regulated, the FCA regulated, or the SISEC, and also there are other regulators, but the major regulators you need to be looking at, the European regulators and the British regulators, or even Australia as well. But if they're not regulated, then I'm telling you, I've had companies actually block me, say no, they don't want me on the platform. And I'm not even trading with any big money. You understand? They're saying that I'm using some arbitrage system to be winning. So that then, and then it's only when I realized this now is when I talked to the inside, when I got an inside now and talked to the people who own trading firms. That was when I realized, it's a zero-sum game. Someone has to win for someone to lose. And then also the fact that these people don't want you to win, So they've got two books. They've got the A book and the B book. The A book are for people like myself now, because back in the days, I was definitely on the B book because I was just losing nonstop. I was just losing nonstop. Now I am on the A book. Now the B book, there's no law against this. This is not illegal, okay? From a trading from a person who owns a trading company, because when they put you on the B book, right, your trade is on the inside books of the company. So if you make money, right, then it's bad for the company because they're gonna have to pay you, right? But guess what happened now? Because 87% of people lose in trading, then what happens, right? You then, with your account, instead of you losing to the market, the real market, you lose it to the company. Okay, so you are then put on their B book. Now, if you're a good trader, they put you on the A book. So therefore, you go out there in the real market, and then vice versa with other people. Okay, but let's come back to this now. That's just a little additional information where if you didn't go on the inside, you wouldn't have known about that bit. Now, what are the best indicators? These are the momentum indicators, the stochastic and the MACD and the AWISOM. Those are the ones I use. I don't use the CCI and I don't use the RSI. Now, all of these momentum indicators, they're lagging indicators. We can just type them into YouTube and they'll give you tons and tons of information about them, okay? Right, now, the next bit now we're looking at is, what does a bullish divergence look like? So I've just drawn a diagram here so I can show you. Now, this is how the scenario works. When we say bullish means that we're expecting the market to go back up. Bearish means that we're expecting the market to go down. So bullish, going up. So for example, you buy Facebook, you expect Facebook to go up. If you're bullish, that means you're bullish on Facebook. If you're bearish on Facebook, it means that you expect Facebook to go down. Now, what we look at now, this is my momentum indicator. This could be, let me show you now. This could be an AWISOM oscillator, MACD, RSI, CCI, stochastic, right? That's the indicator that's there. These are some prices, okay? Some candles that I'll show you in a bit. Now, the candles are going down and down and down. So here are the candles. These are candles, right? And they kept on going down. They kept on going down and they keep on going down, right? Look, and they're going down. But then my indicator, it was low there, right? But then what happens? The momentum indicator is getting stronger. So this means that there seems like there's a lot of buying momentum in, say, if they say Facebook. So this is what I'm saying. So Facebook is going down, but my momentum indicator is telling me that this thing is going up. So I'm like, okay, I've got my signal here now. So then I'm going to be looking to buy about there and looking to take profit probably up to where it was before and so on. This is what we call a bullish divergence. This is what a bullish divergence look like. Okay, let's move now to a bearish divergence. Now look at this now. This thing, and remember what we said at the start, is that it has to be like high, higher, high. If we go back to this one, we say low, low, lower, low, low, lower, low. Okay? So if we get that, then we're in business. And remember, I said that at the start to the whole summer. Just try to remember that bit. Okay. So if we go back now, here we go. So we get a high. This was high, and then it goes higher. Now, so we get a high, then it goes higher. This is the price. These are some candles that are moving up. So these candles are moving up and moving up and moving up and moving up and moving up. So we get a higher high. Now, when we look at our momentum indicator, which is the stochastic, the MACD, the RSI, the CCI, yeah, the WISM indicator. When we look at and we see that this now, the momentum, this is measuring the strength, even though it's a lagging indicator, yeah, even though it's a lagging indicator, it basically that's what we have in there. Okay, with this thing, the momentum is going. So then we're looking to sell with a profit about the point where it was before. Okay, but remember, this is already making higher high. So therefore, it's already in an upward trend. So we are actually going against the trend. That's what we're doing. We're actually going against the trend. Okay, so let's go further now. So this is what we've got now. This is what I'm talking about. So the next stage of this thing now is what we call, and this one I sort of put the candle so I can show you. This is what we call hidden. The word hidden means, okay, that it's not really out there. Like, okay, it's like water. Let me see if I can give you an example. Like water and ice is exactly the same, right? And I'll put my thermometer in the water and put my thermometer in where the ice is, and I'll get 0 degrees. But they're two different states. One is a solid, one is a liquid. Okay. Now, hidden meaning that it's not to compare with the bullish, the sort of the standard way, because this here is these two are the standard divergence. This one now that I'm showing you is what we call hidden, meaning that it's not really there for you to see. Because look at this, right? Look at what's happening. The momentum is almost like the reverse. The momentum is going down, but guess what happened? This thing is making higher low. So the candle's making higher low while the momentum indicator is making lower low. So it's almost like the reverse. Okay. But this one, I don't really see this one that much. And to be honest, I don't really trade this one that much. But if it's available, then I'll take it. Okay. So this is what we call a hidden, yeah, a hidden bullish divergence trade. Okay. Meaning, look, can you see this here? That there is higher than this candle there. Okay. This is higher than that one. And then look at the turning. We've got a turning point there. And we've got a turning point there. Now, on this turning point here now, because this is where we'll be looking to enter the trade, and this is where we're probably looking to take profit, okay? And we'll probably put a stop loss just about there, okay? Depending on our account size. Now, so here we go now. So we are seeing that this thing is making a lower low, but this one is making a higher low. You understand? So once we get this, this is what a bullish buy trade. So if we say bullish, we mean buys. If we say bearish, we mean sell. Okay? Now, here we go. Now, hidden, mean it's hiding away. Okay? Sell, bearish divergence trade. Okay? Now, remember, guys, let me tell you something. While you're in this thing now, yeah, I've got to tell you that you're not going to just look at this unless you've got lots of experience in trading. You're not just going to look at this and then just spot it like that. Because say, for example, if you were, this was my lesson with you today, then your homework for me would be to go away from when we finish this our lesson. I would say go away now and then go and find bullish and bearish trades and stick them on in a PowerPoint. And you're going to find several of them and you're going to identify, you're going to mark the different points. And that's what you're going to do for your homework. So you're going to be going and scoring and I want 10 different ones. And then you would send that homework to me. And then I would check to see if you've got it right. So don't think that no, this is complicated. No. You're gonna have some indicators that are gonna show you where we're gonna have the bullish, where we're gonna have the bearish, and so on and so forth. You understand? Now, so let's carry on now. So we've got now This is what we call a bearish divergence trade. Now, this thing here, that's a high and that's a lower high. But this thing here was a low and this is a higher low. This is this is higher than that one. Whereas this is making lower high, this is making higher high. So can you see now? So this is making lower high and this is making higher high. Now, guys, let me tell you something here. You see, if you can just follow the basic principles and the basic rules, and you have, say, about 10 stocks or 10 indices or 10 whatever, and this is your only trading strategy, and you're just doing it day in, day out. And I would say, look, you do it for, say, 6 months, practicing. Don't do any real money trading. Because a lot of people feel like they can go and read a book and go and watch some YouTube video and become a brain surgeon. Go and try it. People are going to die. Okay. So I'm thinking, right, trading need to be treated with respect. And that's one of the biggest challenges why people are failing at trading. They see all of these videos online, get rich quick, blah, 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 the bends, the this, the that. Let me tell you something. A lot of these guys, and I talk to some of these rich guys sometimes, right? And when you hear the amount of work that they're doing, they've got this business, that business doing. Let me tell you something. They're not, trading is not where most of the money come from. You know, I made some good money between last year and this year from trading, right? Which, before that, it was really, really challenging for me. But because the more I experience, the more I learn, the more I'm teaching people, I'm actually improving all the time because I'm sharing with people what I'm actually doing. And I'm telling you to do this. And then, back in the days, I wouldn't have had my trading plan on the table. But because I'm constantly saying, a trader who I'm teaching so hard, I said, have you got your trading plan on the table? Are you following your trading plan? And I'm like, while I'm talking to him, I'm saying, I need to look in the mirror, Marlon, and do exactly. And even some of the strategies I've taught my students, I'm like, I'm going against the strategy. I'm not following it the right way. And I'm like, you know what, Marlon, you need to listen to yourself. You need to listen to yourself and do exactly what you're telling your students to do and do it. And that's what made a difference for me. Because I'm thinking, right, they've got the saying, do as I do, but not as I. No, 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 no. Do the right thing. Follow your trading plan. Get a trading plan in place. Practice, practice, practice. It's almost like we say, if you don't, I come back to Lewis Hamilton. When Lewis Hamilton was 6, 7, 8, right? He basically was in that little thing and he's going around track for hours, and his dad say he would just carry on and on. And because of he's put hours and hours into it, that's the reason why he's succeeding. You've got doctors who become surgeons. You've got who become consultants, and these consultants are people who have been doing it for years, so they've seen it, almost seen it all. There are always going to be new events, but they would have seen most things. And that's where we want to get to with trading. We want to make sure that we're practicing. We want to make sure that we're looking at it again. So what I'm trying to say here, this 1 hour session is not going to make you a master of reversal trading. It's not going to make you a master of divergence trading. But one thing it's going to give you is an idea that, and if you've traded before, you were like, I could actually use this instead of basically trying to buy here and there and everywhere, or try and sell here and there everywhere. This within itself can be traded nonstop as your only trading strategy. But of course, you've got to be patient. You can't just jump in. You've got to get the signal before you take the trade. Okay? Now, so here are some divergence trading here. So what we've got here now, you've got this thing is, let me see which one. This one look like, is this low? I'm not sure what that one looks like, but this one here, this is like a double. Remember I was telling you about the double bottom, and then if you look, you notice this has the momentum is higher compared to that one. Can you see this one over here, the divergence there, right? And then we've got this one here at the bottom there, and we've got this one here, the momentum. So the momentum is basically decreasing while this is getting lower. Okay. Now, right. So where are we now? Okay, so how to draw the trend lines on a chart. Okay, right. So that's done. Okay, right. So let's go and look at some chart now. Okay. So if we were to look at the chart, right, this is what the chart looks like now. So for example, right, we've got on here now, we're looking to see, let me see, let's look at this one here. This one here is making this high is lower than this one here is lower. But you know, remember what I said was we're talking about the higher high, higher low, lower low, higher high. These things, I don't like the way this one look. Let me try and see if I can find a better one. Why is this chart looking like this? Let me refresh. Okay. Okay, this is making lower low. I'm just trying to see if I can find a divergence trade for you. So that one there. Okay, no. Okay, let me see this one here. Okay, let's have a look at this one now. Let's have a look. Let me show you one here. This here now. We've seen the higher high there, right? Okay. Now, this high, and let's say now we had a high there. Now, this is making, and then what we could do, we take this here and we show this is making higher high, right? And let's look now. And this one here, okay, is making lower high. Okay. Can you see that? This one here, okay. And it's the same on this one as well. Let me show you as well. So all of these, this is the stochastic. This is a PFB squeeze. This is a MACD. Okay, let's look at this one here as well. Okay, and let's look at this one as well. So I've got several confirmation. It's telling me. So then what I'm doing here, I'm going to be selling. I'm going to be selling because I'm expecting this thing to go down. And if I was doing a pound for every point this thing move, I would make because I would probably take my profit about there because of these green lines, this thing is telling me that this is an uptrend, so I need to be buying. So I probably would take in my profit about there when it gets to this pointer. This is where I'll be looking to take my profit. So if I was to risk, I could risk, well, say I'm risking say 40, 50 pounds for a profit of say this would make me about 222 pounds if I was to take this trade as it is. Okay, so that's what we're looking for. Now let's see, can we see anything else? This is making higher high while this is making lower high. Okay, so let's look at this one now. Let me show you another one we could show you again. Look at this again. Can you see that? Lower high. And let's look at this now. But this one is making higher high. Okay, so this one is making lower high, but that one is making a higher high. This is what we call a hidden divergence. So then we're looking to sell again. But then I probably wouldn't sell here because it's too close to the moving average. And that this is just another indicator. But because it's too close to it, I probably wouldn't want to sell at this region. I probably would rather sell if it's above, if it's away from the moving average. Okay, let's see if we could find any more. Okay, now remember I was showing you here. Again, remember, like this is what we call like a double bottom. Okay, this here is a double bottom. Okay, so that's my double bottom there. And then what I'm looking for now, all right, let me just draw some vertical lines so you can see I've got that there. Okay, and I've got this point there, right? Now, of course, I probably wouldn't take the trade too close to, well, because it's in an uptrend, because of this green moving average, then I'm looking to buy. So I probably would buy here, but I probably wouldn't want to sell at the green section here. Okay. So then anyway, I'm saying this is my double bottom, but also this is what I'm getting now. I get my line and I draw from there to there. You can see that's up. Yeah. Okay. Then I'm also looking. Again, I'm looking, where else am I looking? Let me see, is there anything else? I'm looking there. Looking from there. Yeah, up slightly there. And then I'm looking again from there to there. I'm also seeing there as well. Yeah, so I'm going from there to there. So I've got all my indicators almost confirming. Yeah, so that's what I'm looking for. All right, but remember, as I said, these things, it's only about, yeah, practice. Once you practice and practice, look at this one now. Let's have a look at this. We've got one here. We've got that one there. Then we've got this up here. So we've got going up there. Then we've also got again. There it is. Okay. These two didn't form. So that's what we're looking at. We look to sell. We look to sell there. Looking like a pin bar. Looking to take my profit there. Looking to put my stop loss here. Okay. And then looking to take profit. Looking to take profit somewhere there. And looking to take profit somewhere there. Okay. Yeah. So that's what I'll be doing. But you want to make sure you've got good risk reward. That's something that I'll teach. Yeah. Yeah, and that's something that you'll have to learn how you take your risk reward. Let's see if I can find another one here. Ah, yeah, here's another one here. Let me see. Okay, so we've got a slight turn up, down. Okay, so let's show you again. Right. Let's do some vertical lines so we can see the turning points there. So we got that point there. Okay. Actually, there's one that I took. I'm going to show you a really nice one that I made some money on last week. Okay, so that's where we're going down there, yeah? I'm going to show you a nice one I took last week. And then this one here going up like that. Okay. And then we've got another one here. Okay. Which you need to be able to see this thing. That must be going down. These must be going up for you to get that divergence, right? Oh yeah, let me show you one I took. Oh yeah, I took this one. I took this one here. I bought here, about there, because this is going down, and this is like I'm taking a reversal. I'm like, when it was there, I said this thing can't go any lower, and then this thing went lower. This thing went lower, and then I think I did somewhere here. But look, there it is. I didn't really, this is now the proper divergence now, because look at this now, right? Let me draw the vertical line and show you. Remember, we're talking about lower. This is a lower low, right? But then this is a higher low. So remember, we're sticking to the rules, right? But of course, as I said, you probably don't want to buy in this here, because if it goes up to this, the likely chance will turn around. But I bought it anyway. No. Was that one I bought? Let me see. What date was this? Is it the 22nd? No, this is not the one I bought. No, I think it was this one I bought. That one. It was this one I bought. It was here. I did it. I did it here. That's the one I did. Yeah. Okay. No, and I didn't see this part. This part I didn't see. All I saw was this, and then I bought above this candle. Yeah. So what I end up here with this going up, momentum increasing, momentum again increasing. Okay. And this one here, momentum again increasing. And you could have some sort of rule. You could have say, okay, I've got these 1, 2, 3, 4 momentum indicators. I don't use all of them, but I just put them on because I wanted to share with you the strategy itself. But you see, and you say, okay, at least 3 of these must agree for me to take the trade. And that's a part of your rule. If these don't agree, then you don't take the trade. Okay, guys, no, that's it really. That's the divergence strategy in a nutshell. I am going to now basically open the floor to questions, and then I'll try and answer your questions. Yeah. Let me just end this. So let me stop it now. Yeah.